Hey, what's up, everybody? This is Patrick Soukup and Chris Murphy with Fort Collins Fellas, and we are talking to you at the end of June, which will go live here in the next week or so. So this market update will be very relevant information, and wanted to jump on and talk to you about 10 to 15 minutes about the Fort Collins real estate market and the Fort Collins market update. So hang on to your seats because a lot of changes have happened over the last month or so. And hopefully this information helps you making decisions now moving forward. And if ever you have any questions, about whether it's lending or real estate, definitely feel free to reach out to Chris or myself. But without any further delay, let's jump into today's video about Fort Collins market update with Fort Collins Fellas. So Chris, appreciate your time today, my man.
Of course, buddy. Of course. So, wow, 180. I mean, 3 weeks ago, maybe 4 weeks ago, this entire market, I feel like, just completely flipped 180. And like you were saying, Patrick, this is going to come out probably early July. We're doing this at the end of June. And, first of all, real quick, before I get started, shout out to Stodgy Brewery. We went there yesterday.
Solid.
Place was great. I would definitely recommend Little Stodgy, but no, we had a great time there meeting with one of our clients. So yeah. Okay, we'll start with interest rates. Everybody, I get that question all the time, and I will say the volatility is settled. Obviously, this will come out about a week later, but I think the entire market has digested what is going on with inflation, with interest rates. And I think everybody's kind of on this, let's just hold on for dear life kind of mode right now. When I talk to clients and everything like that, they know rates are high. Like that conversation doesn't need to be had anymore. But the one thing I have in my notes today that I bring up all the time, and I get asked this all the time, and this is from smart people. When Chairman Powell and the Federal Reserve raise rates, like they did 75 basis points here in June, they're most likely going to do 75 basis in July. When they do that, the next day mortgage rates do not go up 0.75 of a point. It's not, they're raising the Fed funds rate, which is basically sitting around like 1 or 2 right now. The mortgage rates, the 30-year mortgage rates are almost like a leading indicator. So we've been moving up for the last 5-6 months, right? And it's just been a consistent drive. Actually, when the Fed announced a couple of weeks ago that we were going to go up by 75 basis points, the next day the mortgage rates actually dropped. So I just want to pound that into everybody that just says, hey, when you are reading headlines and you are seeing these things come across and Powell and the Fed are raising rates and your credit card rate probably went up, your HELOC just went up, things like that, maybe even rates on your car, but your mortgage rates are, they're tied to it, but it's not a direct correlation. So I just kind of wanted to hammer home on that and make sure everybody, do you get that, Patrick, when you talk to clients out there? And I talked to a real estate agent the other day and I told her that same thing. She was like, she's like, okay, that's good to know, because I always get asked like, rates just went up. I'm like, they've been going up. Like, what are you seeing on the ground? Or what do you hear?
There's so much chatter, honestly, all over the place. And, they always talk about, all of these lenders have economists that they bake in these interest rates that they assume, like they can make predictions. Like we knew that there was going to be at least a 0.5% increase. Like we knew that. Then kind of 11th hour, so to speak, inflation numbers came out and definitely was some worrisome information that was out there. So quickly, the bettors moved their bets to 0.75 of a percentage point. And so these lenders, yeah, absolutely. They baked these interest rates in, and whether they've baked them in for the rest of the year, because the goal is what, 3.5 to 4.25
Fed fund rate, right? Yeah, I think
Fed
so.
Fund rate. So, they've kind of baked these in to a certain extent, or at least the hope is, but you just never know. Because I've talked with sophisticated investors, kind of doomsdayers, conspiracy theorists, and some are saying 10 plus interest rates for 30-year fixed mortgage. The quote right now is marry your home, date your mortgage rate. And I talked with my dad about that yesterday, and he goes, are you crazy? He goes, we're still historic lows. So there's still plenty of room to go up, but you never know. They could go up to 6, 7 and hover back down to 5. And so for me, it's definitely something that you have to say. I think from what I talk with my clients about is just staying on top of what it actually is, because you could look, I think it's changed a little bit. I've actually had to change up some of my email scripts that I send to clients because we were averaging 3 to 4 offers per client. I'm locking up deals on our first or second offer at this point. There's,
I'm saying the same thing.
A pretty dramatic decrease in multiple offer situations and houses that are sitting on the market. A couple of things to talk about as far as making offers on homes, which will then be dictated from that monthly mortgage and that debt service, which I want to talk to you about as well.
Yeah.
But, just price reductions and days on market are two big indicators. One of the biggest leading indicator is new purchase mortgage applications. But then from there, price reductions and days on market, and then followed by that, inventory increases will be huge indicators for us moving forward to see what the real estate market's going to do. But just quick numbers. In the first 3 weeks of May, we had 56 properties. This is attached or detached homes in Fort Collins, existing builds, had price reductions. We had 85 in the first 3 weeks of June. And so we're seeing these houses that are I actually think we're going to start seeing some stabilization of prices finally, of what is actually market price for the houses. Because for the last 24 months, it was just going up and up and up and up. And you couldn't keep your list price couldn't keep up with the actual market demand of the house. But at this point now, your list prices are actually pretty close or pretty fair to what market value is of that home, or at least what the market sees as market value. But clearly, those that have kind of missed the boat, so to speak, or might have missed the craziness, which was the last 24 months, are having to do price reductions. And
buyers now finally have, I get the question yesterday. I got the question. She's like, all right, be honest with me. Is it a good time to buy? And I said, okay, if you're looking at it from an interest rate perspective, okay, those are high. But if you're looking at it from trying to compete in this market, it's never been better, honestly, from the buy side, because like you said, you're having one or two offers and they're not dilly-dallying around, and sellers are getting a little bit more nervous. Yeah. So you're winning deals under asking price, which never happened. Never in the last 24 months. It
really wasn't. And it's a win now, and it's some relief for the buyers. Yes, their debt service has increased pretty dramatically over the last 3 to 4 months, but the stability of prices have kind of come in tow with that. So I'll be curious to see. Go ahead.
Yeah, a couple of notes real fast. For our listeners, when you're talking to your lender out there's a couple of things that I would recommend asking your lender. One is, they're going to quote you an interest rate. And I always say this rate is par. That means it doesn't cost you any money. Ask your lender what, if you pay 1 point or a half a point, what that will do to your interest rate, because the spreads on our pricing sheets are really tight. Like you could pay maybe a point or a half a point and get a pretty good discount on your rate, just because of the way that they're pricing out these mortgages. So definitely ask your lender about that, because it might be worth it. And remember, if you are paying points to get a lower interest rate, you can, when you do your taxes, that's something that you can put in your taxes and you can write that off. So when you're doing and you're paying, you pay $5,000 to get a lower rate, make sure you include that on your tax returns. The other thing is ask about 2-1 buy downs. So a 2-1 buy down right now is something that has not been in the market at all for the last number of years. But let's just say your par rate is 5.5. The first year, you're going to pay 3.5%. The second year, you're going to pay 4.5%. And then the beginning of year 3, you're basically going to go back to that 5.5%. And the thinking there is, hey, do the 2-1 buy down, get in, pay that 3.5% for the first year. Now there is, of course, we don't know what rates are going to do, but the thinking is you might have an opportunity to refinance in the next 24 months. So look into the 2-1 buy down. I won't get into all the logistics and everything like that, but that's generally how that works. So buying down your rate's not a bad idea right now, and the 2-1 buy down, I just want to mention that as well.
As far as boots on the ground, because I think, one of the things that we can provide our listeners is, yes, they can go research all of this kind of stuff, but what is the feeling that we're getting as far as a lender and a real estate agent here in Fort Collins that are very active? Over the last few weeks, how have you seen your activity as far as whether it's referrals from agents like myself, or people coming in to refinance, or new buyers looking to get pre-qualified or pre-approved for a purchase? What is the activity like kind of in your office?
It's slowed. I mean, there's no sugarcoating it. It's absolutely slowed. And, our team about 18 months ago said, hey, as a lender, it's purchase, right? And building those relationships. And I'm telling you right now, I have seen in lenders that were so refi focused for the last 2 years, are getting crushed. There was an article the other day, JP Morgan Chase cutting a large portion of their mortgage business. I've even seen some online brokers who usually have just these crazy rates. Whether you close on the loan is another story, but I've started to look up their rates. Their rates are ticking up because they are taking such big losses, saying, hey, we're going to offer you such a low rate that's way under what the market is. They're now scrambling. I'll tell you right now, the company that I work for, they're tightening up their screws and everything like that. And these lenders are cutting the fat. So we've seen a slowdown, knock on wood, our team, I mean, not that we saw this coming, but we just know that at the end of the day, mortgages are all about purchases. I mean, Patrick, you know better than anybody in this town, and you have what is coming into this town. People from all around the country are calling your offices and moving to Fort Collins. So I think the one thing that Northern Colorado does have is, they're trying to build homes as fast as they can. It's now turned into a destination. People want to live in Northern Colorado. And I think that is helping not to prop up the housing market, but stabilize it for sure.
Absolutely. Yeah, I talked with an investor yesterday, and I think I might have told you this yesterday when we were having a tasty beer at Stodgy. I think Northern Colorado will remain relatively unscathed as far as, if there is some type of correction or anything along those lines. I think there will be pockets of opportunities as far as for investors if they're looking at coming in, buying some type of distressed asset. For buyers, I think it'll be a great time as far as less, offers. They can kind of make more informed decisions about properties, have full inspections, remove the appraisal gaps, all these kind of different things that we've been just giving the kitchen sink to the sellers over the last 24 months.
Absolutely.
But I do think that, yes, I think Fort Collins remains strong just based off of it's such a beautiful area. And, for people honestly moving here from the Northwest, Northeast, parts of Florida, parts of Texas, California, of course, it's still a very affordable place for them. And, we're talking on a weekly basis with individuals who are considering moving them and their families out here for one reason or another. But yes, I think Fort Collins, Northern Colorado remains relatively unscathed, but you just never know. There's so many curveballs that come down the pipeline. And right now, we're trying to add as much value as we possibly can. And both on the buy side and on the list side, because right now, I'll tell you, I had a listing appointment. I had a listing appointment on Tuesday with a seller in Greeley. Beautiful home, sits on an acre, about 4,000 square feet. And she was interviewing 3 agents. And I think, it was between myself and one other, but the price discrepancy between what one agent was suggesting was the list price and what I was suggesting was dramatic. Like $300,000 difference. And we were on the low side. And I just told her, I said, listen, I could bullshit you all day long and tell you that you're going to get that price and get your business and then try to get, convince you to have a price reduction 3 months or, 2 months later. But, that's not how we conduct business. We're not we don't need business. We're not hurting or having anything, but I can tell you, you will absolutely crush yourself if all of a sudden you start doing price reductions and don't price yourself accordingly, because who the hell knows what's happening in these coming months. And right now, I think it's still a very strong seller's market. Let's not be,
And one other thing I would say too to our listeners is, if you have a house listed for 500,000, let's just use an example, 500,000, this is the time as a buyer to see if you can get the seller to cover some of your closing costs or to cover like the cost on those 2-1 buy downs. So like if you were sitting there going, okay, listing price is 500, and you say, all right, we'll offer 505, but I want $5,000 in seller concessions. And you can use that $5,000. That's actual cash in your hand that you're going to save. And you use that $5,000 either to buy down your rate, cover your closing costs. And the difference between $5,000 on a 30-year mortgage, if you're putting 10% down or 20% down, at the end of the day, it's like, I think so. I did one the other day. It was like $9. It was like $20 or something. I was like, you guys, save yourself $5,000 and pay $20 more a month, and you're going to get a lower rate and everything like that. So definitely something else that the customer and the buyer out there should be aware of and look into.
Quick story for you too on this, just real fast I'm working with a client. We actually closed today on a property. It's $1 million property, and he financed it, was putting significant portion out, about $500,000 down. And put it on a 15-year fixed. And he's from the Northeast, from the Boston area, and he was using a lender from that area, a banker. And we were able to negotiate an $11,000 seller credit. And I get an email yesterday. We were signing today, closing today. I get an email yesterday, And the lender he was very difficult to communicate with. So, word to the wise, this is one of the big reasons I like to discuss, talk to and emphasize using a local lender, especially one that potentially we have a relationship with as real estate agents, because when situations like this occur, it's not even a question of matter of getting it done. It's just how quick we can get it done. But the $11,000 credit was too much couldn't cover all of the closing costs. So there was only $8,700 of closing costs. Yeah. And I said, and so the title company sent me an email like, well, they couldn't use it. So we used as much as we could. And I was like, bullshit. I was like,
buy down your rate.
Of course I could. Yes. That was the quickest thing I said. I was like, well, let's buy down the rate and, increase your closing costs and fully utilize that extra $3,000.
Absolutely.
And so we did. It decreased his price, hit his monthly mortgage by $60 a month. And it cost him $1,300 out of pocket. So it's going to be basically a 2-year payback for a buy down of the rate. And his plan is to be there at least 5 years. And he's got a sweet interest rate, probably won't need to refinance anything, especially on the 15 years. So, it's one of those things where you got to be careful with what you're doing.
Yeah, that should have been caught basically 3 weeks ago. you know how much juice you have in the tank. And if you use it all in closing, then you just apply it to the rate. But no, Patrick, it's going to be interesting. I think what happens over the next few months. And, I think this is from you're on the real estate agent side. I'm on the mortgage side. It's definitely going to weed out some of these people that jumped into this market in the last couple of years thinking it was just like, this is easy money. That's definitely changed. And, but yeah, I think it's funny. Every market goes through ebbs and flows, right? And it's just like right now, the stock market is not doing great. Crypto's not doing great. Like every investment that you're touching right now is just like, oh my God, nothing's going well. And listen, these things pass. If you're a long-term investor, at the end of the day, just do what's right for you and your family, and you're going to be fine.
Couldn't agree more, my man.
That's all I got, buddy.
Yeah.
Should we?
One last thing I want to throw out there is things that I'm going to be watching come July or end of July, beginning of August is days on market for properties. I think that's going to be significantly increased from what it currently is. And again, new purchase applications, days on market, inventory. Those are the things that we're watching to see what this real estate market's going to do. And we will be bringing you that information as it comes.
And one thing too, is we're on the mortgage side, the bond market side, the CPI number. When that comes out here in a week or two, that CPI number, that next inflation number, that thing's still in the 8s. Watch out. It could be a little rocky, but that's the number that I'm really paying attention to. Lastly, before I let you go, we got everybody go. End of July, we got a guest coming on, Mayor of Fort Collins, Jenny Arndt. So that is going to be really, Patrick and I are going to, not go after her. It's not the right word, but we want to get the mayor's take on what's going on in Fort Collins. And I'm looking forward to that and to see what she has to say about growth, about a lot of things in our community. It's going to be education and healthcare and, homelessness and all those things. So that'll be a big episode coming up later in July.
100%. Can't wait, buddy.
Cool, bud. All right.
Everybody,
thanks, guys.
Take care.
See ya.